Very good evening, everyone. This is Rajendran here joining from Market Calls, and welcome everyone to mini certification course on Amibroker AFL programming. We've been in the third part of the series here, and in today's session, we're going to discuss something very interesting. What we are going to discuss here is like we're going to design a intraday trading strategy, of course, with target and stop loss, and with control with alerts. Like how one can do that, and how to design a scanning or exploration based automation control using Amibroker, and how to implement a backtesting optimization and Amibroker, and who should run automated trading strategies, and how to deploy the trading strategies in virtual server. So these are the things that we're gonna learn in today's session. First, we'll start with backtesting and optimization, and then slowly we convert that particular trading strategy into an intraday trading system with targets and stop loss controls with alerts. And then we'll try to design a scanning and exploration module. And finally, we'll try to create we'll try to deploy a trading strategy in a virtual server. All right, so I hope the audio and video quality is good enough to kickstart with the session. There is a chat box down there, and as usual, the session is getting recorded. I hope the audio and video quality is good enough to kickstart. So let me kickstart with the session here. So first thing first, let me go and pull up the Amibroker. So the last two series, we discussed how to build a simple trading system. I'm also having a simple trading system here, simple on-chain channel. I'm going to backtest this very simple trading system over here. You know what is a backtesting? You know what is a simple on-chain channel is all about. So here is the data I'm having. I'm having a data for the last, almost I'm having the data for the last, probably we can say like 11 years of data. And having this strategy, of course, the strategy is having what? I'll go to new analysis. I'll go and pick up the strategy. So I'll go and pick up the strategy, whatever I had built. First, let me save the strategy here. I'll go to file, I'll go to save as. I'm going to post this strategy inside a mini certification course. I'm going to post it under part 3 of the session. So part 3 is what I'm going to keep it over here. And I'll say simple on-chain channel. All right. Simple on-chain channel. Now I want to backtest this strategy. So when I want to backtest the strategy, what I'm going to do here is I'm going to include a code. Already the code is included. So I'm going to include a code called set position size, 1 time of round lot size, comma SPS shares. I can put directly 25 as one lot. This is one way. Here the set position size uses fixed quantity, fixed number of shares, I can do like this. This is one way. Okay, so this set position size is mostly used for the backtesting purpose. Then what else it is required? Probably I'll go and send it to analysis. There is a send to analysis button is there that will push the price. It opens an analysis and it sets the value over here. Let's say I want to run a backtesting on the Bank Nifty. So I'll select Bank Nifty at the top and I'll go and select current over here. And I'll select all codes and the database itself having 11 years of data. And I'm going to backtest on a 15-minute time frame. So I go to the settings. Now from the settings, I'll go and set maybe 15 minutes. And I'll say I'm going to have 2 lakhs of capital over here. I'm going to run with long and short position. Both long and short is what I'm going to run here. And I'm going to keep the commissions as 0.02 at this point in time. 0.02 is the percentage commission. I'm going to keep it. Let me tell you the list of things that what I had done. I had set the periodicity, number 1. Then I had set the what? I had set the initial equity and then positions long and short. And the third one, very important one, it is percentage commission. Generally, percentage commission works out to 0.0012. That is theoretically. Practically, it can be 0.02 or 0.03, or in some cases even 0.04. Depends upon our style of execution. All right, so the one important thing here is if you are backtesting futures or option trading strategy, you have to enable futures mode so that it takes margins. So these 4 settings are primarily very, very important over here. Now, one another thing that we also have to do if you are backtesting future symbol is like you have to teach Amibroker what is the lot size and what is the margin requirement. So once this backtesting settings are done, next one is like symbol settings. So for Bank Nifty, I have to set what? I have to set the lot size. I also have to set the margins. So I'll go to symbol, and then from here I'll go to information. So symbol and information, it opens up a tab. Here you can go and set the round lot size and margin deposit. So round lot size is 25 and margin deposit is minus 17.55. The minus here represent in terms of percentage. That in 17.55% is the margin which is required to purchase one lot of Bank Nifty, right? So now Amibroker knows the lot size of Bank Nifty. Likewise, for different symbol, for example, let's say I want to set the lot size for Nifty, I can go and set those particular symbol, lot size and margin deposit and tick size and point value. I can keep it. This point value is generally used for US markets, because in S&P 500 you'll be having every one lot they will be having a 20-cent movement. So you can put 25 over there. So $25 movement will be happening for every single tick price action. So this point tick is mostly can be used for MCX if we are using MCX, right? So for example, 1 kg of gold, we can put every one lot is required what? So 1 kg, I mean 1000 is what you can post over here in terms of grams. Or in terms of crude oil, you can make it like 100. So point value is very much important. In case of MCX, we can use point value. Or in case of US markets or any other international markets you are trying it out, most of the international markets, they will be having a point value. Right? When it comes to stock markets, yes, when it comes to Indian stock markets, we can consider using only two things. Point value, you can keep it as one itself. Instead, you can use round lot size and a margin deposit. All right. Cool. So, am I still audible? Like, you people are able to hear me? Or I'm talking alone? Yes, Rajiv says yes. Lakshmikant says yes. All right, great. That's great. So let me do one thing now. Once all the settings are done. So what are the settings? I'll explain again. We go to the backtesting settings, periodicity, initial equity, positions, percentage commissions, futures mode. That is done. And then we went to symbol information. That opens up a tab. So information tab. We set the round lot size and margin deposit. So I'll go to Bank Nifty as usual. Now I want to click on the backtest. So what I will get is like each and every line represents the trade, right? Which happened exactly at what time? What is the entry price? What is the exit price? What is the profitability? How many contracts? If you see that contracts are totally fixed, means we are trading only 25 shares at any given point in time. All right. And it also shows how much margin has been deployed for that particular trade. The position value is represented in terms of margin. I mean, back then, right, Bank Nifty doesn't require much of a margin. So 17% margin means you may have 52,000, you can take one lot of Bank Nifty if it is having a 25 contracts. But then now the lot size, I mean, now the margin requirement would have been changed with the same Bank Nifty right now. I mean, this is like back in 2021. So that when Bank Nifty value is like 37 to 73 levels, the margin goes like 1,66,000 kind of margin is what required to trade. So as the time is increasing, when Bank Nifty is also increasing in value, margin also increases. So accordingly, the profitability has been calculated. This profitability is adjusted to the charges, commissions and slippages. The 0.02 commissions is deducted on both the buy side also, on the sell side also. All right. Or if in case if you want to have a different style of brokerage, then you can also choose something else like dollar per trade or number of shares per contract. But I prefer, if you are using Indian markets, it is highly recommended to use it in a percentage terms. Try to calculate your brokerage slippages, taxes, turnover charges, exchange turnover charges, GST, everything, put it in terms of finally in the percentage terms. So you will get a fair idea how much money you'll be paying in terms of brokerage. So now the moment I hit the backtest, what is happening? So this is 11 years of backtesting data. I'm doing it on a 15-minute time frame, and I'll be getting a result. So those results, I'll be able to see it in a complete report over here, right? I'll be able to see it in a complete report. So how many number of trades it got generated? On a 2 lakhs capital, what was the ending capital? What is the net profitability? What is the compounded annual return? And how many continuous winners, right? So what is the win rate? 36.61 is the win rate. Why? Because it's a trend following system. Generally, trend following system will have a lower win rate, something like 35 to 45% is the lower win rate. Generally, trend following systems will have. Even trend systems like Super Trend, Donchian, EMA crossovers, so all belongs to the trend following system. So generally, win rate will be lower, but profit will be at the maximum. Okay. And how many continuous winning games? How many continuous losing games? Can I afford to make such kind of returns? Can I afford to make? Can I afford to withstand this continuous losses? And what is the drawdown? How much money I can expect I can lose over a period of time? It gives you a lot of insights and also a lot of metrics about the trading system like Sharpe ratio, K ratio, and Ulcer index. A lot more things, CAR over MDD, lot more metrics. It gives you to explain how riskier a trading system is, and not only that, how rigid, how smoother the returns are. And it also provides you a graphical input on the chart section. So you can go to the charts and you can see how over a period of time, how the strategy had evolved, how it made money, which phase it lost money, why it lost money, and how much, where are the places the risk was there. So this is an equity curve. The top one, the green color one, what you're seeing is the portfolio equity curve. It shows how your money would have been grown over a period of time if you keep on trading the buy-sell trading system. However, the underwater equity talks about risk involved in the trading system. When there was a deep crash happened in the system, how much percentage it had lost? In terms of percentage only it shows. And what are the total money that you are having right now? Let's say your 2 lakhs become 10 lakhs now. On a 10 lakhs capital, how much drawdown it had made? So obviously, the price losing 22% here is smaller compared to the price losing 22% over here. Why? Because when the price was losing here, probably the capital was like 2 lakhs, maybe approximately 20% loss means on a 20 lakhs capital, it would have lost something like 50,000 rupees, it would have lost. But it is not the same 22% over here. Also 22% loss is happening. But on a what capital? So what is the capital by that time? This is back in 2020, right? Back in 2020, the capital was like approximately 1.2 million, right? So it was like 1.2 million over here. And then the 20% crash happens. That means what? A very big money would have been lost in terms of money, approximately some 2.8 lakhs. Right? We can also see it in terms of money also. 2.8, approximately, I think 2.8 lakhs would have been lost, which is like, you can also see that. Like the peak of the capital to the trough of the capital. This is what we call as a max drawdown, right? From the peak to the trough, if I could measure, I think approximately it should come around some 2.8 or 2.9 lakhs, I think. Okay, cool. So why backtesting is so important? It is important because you get to have a fair idea how a strategy is performing. Can I emotionally run this strategy or not? And more than that, is there any fine tuning I can do it? So how to do the fine tuning? Doing a fine tuning is pretty much easier. Open the strategy, whichever the strategy that you want to have. Always there'll be some main parameter will be there, which is controllable. So in this case, we have a parameter called the length is a controllable one. So I'm just changing it to optimize. When I change it to optimize, by default, the value length of the Donchian channel here is 20. But what I'm going to do now, I'm going to run the backtesting with value 1, value 2, value 3. Likewise, I'm going to run the backtest till 50 times. I'm going to run the backtest for different length. So once I done this, I'm just making this parameter controllable so that I can optimize it. Now, if I go and run optimize, what I will be getting each and every line here is nothing but a backtest with different length of the Donchian channel. So I go here at the end, you can see that the length of the channel is here. So this is like downchain channel 1, downchain channel length 2, length 3. Likewise, I'm having up to 15 length, 50 length. I'll do the optimize. You can see that how faster it is. Amibroker has one of the world fastest optimizer, and probably you can see that 50 into 10 years, almost 50 years of backtesting is happening in within how many seconds? 5 seconds. 50 years of backtesting within 5 seconds. And that is the power of Amibroker. Even if I want to do hundreds of, even if I want to do 100 also, let's say I want to change it from 1 to 100. It means 100 backtesting results that I want to publish. I'll hit the backtest over here. I hit the optimize over here. And now you could see that approximately it is still taking 10 seconds or 11 seconds, like 11 seconds to complete 100 backtest. So all the results are here from 1 to 20. 1 to 100 it is there. From 1 to 100 it's there. But then I can also sort with the net profit. You can go back and check which strategy had yielded a better results, or which strategy had resulted in a better drawdown. A controlled drawdown is possible over here. Probably the line number 15, maybe 15 is the length, which is bringing me an optimal length. Instead of 20, I'm going to make it like 15, where the risk of losing money is pretty much controllable. So I'll go to the backtest. I'll hit the backtest here. I got a better number. Instead of 20, maybe if I use 15, what was increasing over here? Number of trades are increasing. Obviously, the winning rate, there is no differentiation at all. But the major thing here is happening in terms of losing money. So in terms of losing money, if you could see here, it was not losing much of the money here. And the controllable drawdown is also there. Even 2020 also not much of the money has been lost. At the start, there was a 25% losses here, but that is in terms of at the start, probably it lost from 50,000 rupees. But even in 2020, it lost only 8% of the total capital. That means what? When during 2020, there was a small drawdown it went through, but very quickly it recovered back. So this looks like it's small, but it is not small. It is like 1.2 lakhs of losses. It looks like it's a small loss, but the only thing is like if you try to backtest between a certain period, you'll get to have a fair idea. And maybe I'll show you if you want to backtest between 2 different dates, what one can do here is one can choose from and to quotes, from to 2 dates. And from here, we can choose like January 1, 2020 to till to date. I want to backtest till to date is what, or maybe 2021. So 2 years I want to run the backtesting, 2020 and 2021. I'll hit the backtest here. So now I'll be able to see the results completely. I'll be able to see the results, how many trades has been done, and what is the capital within that period, right? Where is the risk? Everything I will be able to see it from here. And yes, now we can find that its numbers are very big at 30%. Why is it so? Because when the capital was like almost it went like 2.5 lakhs. From the 2.5 lakhs, it lost 30% of the capital, and then it started bouncing back from there. That's what it means, right? That's what it means. So when you are analyzing the underwater equity, depends upon your start date and end date. The underwater equity always changes. It is in terms of percentage. So you have to be very cautious. Just like that, seeing the numbers. Some people think like, hey, I want only 10% drawdown. They might be thinking differently, but what Amibroker shows is completely different. It is in compounded numbers. So what I want to say here is probably the drawdown which happened here, which might be smaller compared to that drawdown which happened over here. Why is it so? Probably your capital would have grown. After the capital would have been grown some 5x or 10x, and from there even a small drawdown will be looking bigger because it is calculated on the total capital available with you at any given point in time. All right. So more the money grows, even a small drawdown will be big in terms of a bigger drawdown can possible, but still Amibroker will show like a smaller drawdowns. Okay. And the biggest of the biggest drawdown could be the smallest numbers also, equally likely. All right. Anyways, so we move on to the next topic. That is what I want to talk about, that how to backtest and how to optimize a strategy. So we have simple two backtesting and optimization engine over here. The next most important thing here is like how I can convert this strategy. Let's say I'm having a strategy here. This particular strategy, I want to make it intraday. Right? How to do that? It's very simple. I mean, last time we talked about that, but I'm going to show you in terms of coding how to do that. Last time I showed you in terms of module, ready-made module, you just drag and drop and it's done. But how I can actually build a intraday trading system? So probably we're talking about intraday trading system. It is to do with timings also, right? So I'm going to have three timings over here always. Signal start time, when the signal should start, and when the signal should end. Signal end time, sig end time, and then I'm going to have a square of time, SQ of time. So these are the three timings I'm going to keep it along with the strategy. I'm going to have a param control. So param time is to control the time. I'm going to say probably signal start time. I'll say start time, signal start time, comma. I'm going to say like 9:30, 9:30. I'm sure if in case if you are having doubt whether your entering value is right or not, always you can use control F1 or function F1. So you can see that. So that's almost we've been right on target. So 9:30 is what the start time I'm setting over here. And likewise, signal end time also, I'm going to use an param time similar to that. So I'll simply copy it. I don't want to take any fresh trades after 2:30. So I'm going to keep it over here like 14:30, right? 14:30. And I want to square off no matter what at 3 o'clock. Exactly at 3 o'clock candle. That means 15:00. You have to use railway timings only. So all the three timings I had set over here. Now, what I'm going to do here is along with my buy signal and sell signal, short cover signal. Here is my entry signal. My buy signal is my entry signal. Along with this signal, I want to buy it only if the signal is happening between the start time and end time. So I have to say like what? And time num. So time num is a function which stores the array of the candle timings. Each and every bar contains its own candle timings. End of the candle timing mostly. So time num should be greater than my signal start time. And at the same time, time num should be less than the time of candlestick. Whatever candlestick which is appearing during the live markets, it should be less than the signal end time. Okay, this is for the entry. Means what? Even for a short also. Short is nothing but what? Crossover of low, comma low. That is the short signal. And at the same time, it is bounded. The signal should only appear between these two timings only, not before that also. Before 9:30, I don't want any signal. After 2:30 also, 2:30 p.m. in the afternoon also, I don't want any signal. So this entry signal should occur only between these two timings only. Signal start time and signal end time. That is the timing applied over here, signal start time and signal end time. So this is applicable only for the entry condition. Only for the entry condition, we're going to restrict the signal. But sell signal is more of an exit signal, right? So this exit signal can happen if a reverse signal is going to happen, or if the square of time is reached, or if the time num is greater than or equal to SQ of time, square of time. Same thing goes for cover also. I cannot simply say buy because buy value is something different. Here buy value is completely different. So I just chosen either price is crossing the upper breakout or the time num is greater than the square of time. I have to exit my position. Remember, when it comes to intraday strategy, entry conditions, timing conditions are almost similar. We use AND functions. And for exit condition, we used to exit using a OR condition. Why? Because either if the negative signal is happening, I have to exit, or if the timing is also happening, I also have to exit. So this makes the strategy a pure intraday strategy, right? So, and also we have to do what? We have to do an XREM. We have to do an XREM for short and cover also, obviously. Let me do that. Removing excessive signals. Okay, I'm gonna say like short equal to XREM of short comma cover. We had seen in the previous series why to use an XREM. XREM is to remove excessive signals between short and cover. When multiple short signals are there, it will be removed, or when multiple cover signals are there, it will be removed again. Likewise, cover equal to XREM of cover comma shorts. Right. So then what? Obviously, I need more things. So one another thing is like signals. So if in case I want signals, what I will do? I said like I'll be always going to Google and I'll try to get plot, buy and sell signals, market calls. So I'll be getting this code snippet. And from the code snippet, we can simply copy that format. The format is pretty much simple. Okay, this is the format. I'm going to copy it. I'll go back to the code and I'm just simply going to paste it. I'm going to paste the modules over here. And then I'll save it. I'll do file save as. I'm going to push it into part 3. I'm going to say like simple downchain channel. I'm going to say like intraday trading system. Of course, it is only intraday trading system. As of now, I haven't added any alerts or I haven't added any of the target and stop loss yet. I'm going to do that. So this is the most easiest thing to do, right? Now, apply. Of course, I have to fix it's shown to be short. Save it. Check it out whether there is any issue and go and apply. Check the charts whether charts are generating proper signals or not. So here we are having that module, but it is not generating any signals at all. Why is it so? It's supposed to generate signals, right? The primary reason is it is having a. The primary reason could be because of a couple of reasons. Number one could be whenever you're using a time num, right? Whenever you're using a time num, a couple of things need to be checked and a couple of information need to be checked over here. Yeah, so one major thing is like there's a small mistake over here. It's not a mistake though. It's a silly thing. You see that the start time, here also it's start time, here also the start time. When you're going to use like this, I'll tell you what will happen. It will result in a problem. If I rightly go to parameters, I will get only the start time only. So that messes the complete strategy. So what one need to do here is take the better approach. I'm going to say like start time, end time, then square of time. So if I give proper labels, square of time. If I give proper labels, what will happen? If I give proper labels, now the trading system might be working very good. All right. So that is a very important thing. Now you can also control the strategy as well. You can see that square of time 3 o'clock. The timing is getting close. So it's exactly at 3 o'clock. You might be seeing a star over here. Any pending signal which is there, it closes out the strategy by default. So you can convert any strategy into an intraday strategy. Things are very simple. All you have to do is you have to have a signal start time, end time, and square of time, and try to implement those timings into your strategy. It could be any strategy to combine with your timings for the entry and also for the exit. Remember that for entry, you have to use AND signals because you are looking for a signals between signal start time and end time. Whereas square of time is different. Either if your negative signal is happening, you have to square it off, or if the timestamp of the square of time is reached, or if it is exceeding, you have to square off the positions. All right. So now what I'm going to do here is I'm going to add one more very interesting module, alerts. So once all your buy sell chart cover, everything is done, once your completely strategy is done. So what I'm going to do here, I'm going to save the strategy as an alerts. System alert. I'm going to add all-in-one alerts only. Any strategy, let it be. It's very easy to add alerts. So again, what one have to do here is very simple. They have to go to Amibroker Intraday trading module. Just Google it. You might be landing in my page most likely. Simple intraday module with target, stop loss. So this particular module contains something called all-in-one alert control. This is the block I need. It's a very interesting block though, because it contains all sort of alerts. You can see here, this is the alert. It starts from here. Copy from here, the all-in-one alert section. Just copy it. It's going to be the easiest one, but it's a lengthier module though. It contains everything that you need right from start. It's been keep going on. Never mind. All these are like simple controls only, nothing much complicated programming. Maybe for the beginners, it might look like a complicated one, but ideally it is not. So copy the block and bring it on and paste it out, right? So this is a complete block. I'm just pasting over here. Now after pasting the block, maybe you can paste the block at the top also. It doesn't matter. You can also paste the block at the top above the dancing channel. You can keep alert controls there as well. Now, once you're done with that, now you can come to your strategy. Come to the strategy. So where we had done with the buy, sell, short, and cover. Let's see, here is where we had done with the buy, sell, short, and cover. So what I can do here is maybe at the end of the code, I can do a very simple thing. I can add a function called all-in-one alerts. It's a custom function where I'll be transmitting buy, sell signal. I'll be transmitting the short signal and the cover signal. Cover signal. So that will bring me all the controls, whichever is necessary and it is required. I'll be able to bring it out. Let's say I'm adding it to the charts. Now let me go on to the charts here. Oops. Yeah. So here are the charts. I'll close the top one. The bottom one, which I had built. If I right click, I go to the parameters. You can find all those controls enabled. Right. So you can use this control only for alert purpose. So maybe if you want a label alert, you can just turn on the label alerts. Or if you want sound alert, you can just turn on. Or mail alerts. If in case if you already install for mail, you can configure mail alerts. Voice alerts, buy signal, sell signal, those kind of voice alerts you'll be able to get. Pop-up alerts you'll be able to get. Telegram alerts also, if in case if you're having a bot, if you're having a channel ID, and if you add the bot to your channel, and you can send alerts even from Telegram also. All right. So configuring is not a big deal over here. And then your regular downchain channel controls, the start time, end time, square off time, and press OK. Now, if you try to simulate over here, all those alerts will be automatically getting generated over here. For example, let's say I'm just enabling the voice alert, pop-up alert, right? That's what I'm gonna enable over here. I'll go and play some random dates. I'll pick up some random dates. Okay. And I'll try to play. Obviously, if there's any sell signal is going to happen, it should be generating the signal. So as of now, signal is not generating because we are generating signal only after 9:30 only. Still, the condition is not met because after 9:30, if it would have been 9:15, the signal would have been occurred at the opening itself. All right. So let me fast forward. So when you can see that the short signal alert happened with an pop-up. It also comes up with an alert as well. I mean, as voice alert, you might be able to hear that. Did you guys hear the voice alert? If yes, please type yes. So so that I can understand that you're able to hear the alert sound. Anybody? Prakash says no. You haven't heard the voice signal. Maybe is there any way to transmit the sound? I think there's a provision to share sound. Maybe I'll try to share the sound now. Maybe we'll try with one more alert here. Maybe this time you might be able to hear the sound also. Whatever my system sound is generating, you might be able to hear it. Let's try this out. Let's see the touch
buy
and
and cover
level.
signal.
You could have been heard the voice now, buy and cover signal, and robotic voice saying that buy and cover signal. Yes, you should have been, right? Yeah. Maybe we'll try one more. So here buy is also happening, cover is also happening. That is why the buy signal represents the green arrow and short cover represents the red star. So both are buy means you have to close your position and you have to reverse from short to long. That's what it means. Let's try one more signal and then we move on to the stop loss and targets. Maybe I'll make it a bit faster.
Short and sell signal.
Right. So same thing can be automated. You know how to automate it. It's showed you some smart order module. Just drag and drop the smart order module automatically. It can be get automated very easily. All right. So now this is more of an intraday strategy also, and we have the time-based control. We can control the time. We can control the exit, when to exit, everything. We can control it from here. Now, the best part we had done here is we also learned how to connect any strategy, not only this strategy, any strategy which is having short, buy, sell, short and cover. You can add the all-in-one alerts module, which you can get it from the intraday module. Just copy and paste the block, and then at the end, you have to add only one line of function, all-in-one alerts. It's a custom function that you have to transmit those variables. At the end, you have to add what? Buy, sell, short and cover. That will bring all kind of alerts that you want. Everything in one alert, it is already configured over there. All right, so next, the most important thing that we're going to talk about over here, what we are going to talk about here is like, we're going to bring targets and stop loss along to that. Okay, so that's going to be the, again, slightly tricky one, but the most important one. We're going to play with the buy, sell, short cover values. So I'll do one thing. I'll go back to the code and I'm going to say like simple Donchian channel, intraday, it's an intraday strategy with stop loss and target. Okay, I'm going to save this as a separate file. File save as intraday trading system. I'm not going to have any alerts over here, but I'm going to say like intraday trading system with target and the stop loss. Okay, so why I'm removing this alert module. It's okay to have an alert module, but I'm going to remove it over here. The reason is later on I'm going to convert this module into a exploration based automated trading system. For that reason, I'm just removing it. So I'm going to have a very plain vanilla intraday trading system is what right now I'm having it. But I'm going to convert this into a target modules. So how to do that? It's again very simple, as I said. What we have to do here is we have to implement a stop loss and target control. So I'm going to use an stop loss and target controls over here. I'm going to have one more parameter called stop equals. I'm going to have I'm going to select stops in terms of points. Okay. By default, I'm going to say like maybe something like for Bank Nifty, I'm going to say like 75 points stop loss. Minimum is going to be, they can vary from 1 to maybe 500, the step size of 1. Likewise, I'm also going to have a target also. Target in points. Target, I'm going to keep it like something like 200. Now, what I want to do here is, so I have a control. I can set how much target I want, how much stop loss I want. I can set it. All those are in number of points. And now when it comes to entry, so now we have an entry over here. This is what the things will get tricky over here. I got the entry. So if I got the entry, I also need so finally I'll also do an XREM. So I'll be getting an entry over here. Now, once I got the entry, one thing I always do when I'm configuring buy and sell signal is like with target and stop loss, I always configure the buy. Sell, I put a dummy sell, I sell, a temporary I sell is what I'm going to put. The reason is we cannot determine the sell exactly. Sell can happen for various reasons. One, it can happen because of the square of time is reached, or if the reverse signal is happening, I have to exit, or if the target is hitting also, I have to exit. Stop loss hitting also, I have to exit. So there are always 4 types of exits are there. So for time being, we know only 2 solid exits. We don't know whether the target will hit or stop loss is hit. Nobody knows. So until we know that, I'm going to keep it this as a I sell. So complete conditions are not framed yet. So I'm just putting as an I sell as a temporary one. So likewise here also I'll make it like I sell. XREM also I'm doing between buy and I sell one. Right. So I sell is what? It's a temporary signal. Now, buy and I sell is done. What is important here? The buy price. So we know that the buy price is over here. The buy price, I'm just going to bring it over here. I'll cut from here. And then I'm going to bring it next to the buy. We know that buy is confirmed. Buy always happens because of we have only one entry possibility that it should break up the upper channel. And the upper channel is broken. That is the entry point. But now what I'm going to do here is I'm also going to calculate the buy stop loss and buy target. Buy stops equals nothing but what? Upper channel is my entry price. So buy price minus stop. That is my entry level stop loss. Likewise, buy target is how much? From the entry price, which is nothing but buy price plus target. Right. So now I have a stop loss and target. So now I can exactly write my sell signal. My sell signal is, what are the sell signal conditions? My I sell, which contains what? Time-based sell signal. I sell contains what? I sell contains time-based sell signal and also reversal signal. Either I sell should happen or stop loss can hit. So crossover of, if the low of the candle is breaching, for example, if the low of the candle is breaching the buy stops, breaching the low of the candle, that means it is nothing but the stop loss is hit, or a target can also hit. So target we can hit by, we can measure using the crossover. If the high of the candle, if it is touching the buy target, that means the target is, it's done. So I have all the 4 conditions ready. I sell contains what? Already there are, it contains 2 conditions already. Crossover of the lower comma low, that is 1. And number 2, this is stop loss hit. And number 4, it is target is hit. So all the 4 conditions are already listed over here. Sell is also done. So buy is done. Sell is also done. Now, for a safety purpose, it is always a good idea to do a XREM one more time. Now we have to do an experiment between buy and sell. So I'll just simply copy this to ensure that there are no multiple signals. Sometimes what will happen, stop loss might be crossed multiple times. So it will generate multiple sell signals. So I have to remove multiple sell signal by doing an experiment between sell and buy and sell, so that the multiple sell signal would have been done. So once the experiment is done, so here you can see that once the experiment is done, then only I'm just putting the buy price. Likewise, here also once the experiment is done, then only you have to configure the sell price also. So sell price is a bit different because sell price depends upon multiple conditions. I'll do one thing, I'll remove the sell signal over here because sell condition can happen because of multiple reasons. Listen very carefully. Sell signal is if the signal is happening because of the reverse signal. Think about that reverse signal. That means if the crossover of lower channel of the downchain is breaking out, then we will be using the lower channel as the entry point. Or if the stop loss is getting triggered, maybe the buy stop is your exit point. That is your exit price. Or I can put an I can also type it in multiple lines also. Or if the target is hit, then target is your exit point. Right? Buy target is your exit point. If none of them is not happening and still exit is happening, that can be because of only one thing, right? That means the close of the candle will be using that as a exit point. That is what I'm going to say. This entire thing, I'm going to put it inside a function called value when. So value when sell signal is getting triggered, this is the value I'm going to use it. Okay. And that determines the, it's not sell, it's going to be a sell price. My sell price is what? I will sell it. Actually, when the sell signal happened, I am looking for multiple conditions. If lower channel breakout is happening, then lower channel will be my sell price. Or if the stop loss is hit, then stop loss is my sell price. Or if the buy target is hit, then buy target is going to be my exit price. If none of them is there, obviously square of time would have been reached. So I will exit at the close of the candle. The 3 o'clock candle, I will exit at the close of the 3 o'clock candle. So that is how the sell price could have been done here. All right, the procedure is very simple. We have a time-based condition. However, entry, we are keeping it as simple as the same. We are not touching at all. Exit, we are using a temporary I sell signal. We are removing between buy and the temporary I sell. We know that I sell, we are doing it because I sell is temporary because target and stop loss conditions are not included. So final sell signal is not calculated properly yet. So we calculate in order to calculate the sell, we need entry stop loss and we need a stop loss and target levels. So we take the entry price, we calculate the entry price, buy price is the entry price. And then on top of that, we are calculating the buy stop loss and buy target. This buy stop loss and buy target is very much required to finally calculate the stop loss and target levels. And then we are doing what? We are once again removing excessive signals because this could create multiple target touching, multiple stop loss hitting. So we are removing those excessive signals because we want the first touch only, whether first time it is touching the target or first time it is touching the stop loss. That is what we need. So again, we are doing one more experiment. And then finally, we are doing the sell price, which contains all these multiple conditions. So accordingly, whichever the condition is met, the pricing will be set properly so that your backtesting results will be proper. If you are skewing, if you're not writing this line right, your backtesting report may not be correct at all. So if you want backtesting to reflect a proper value, always don't forget to code your buy price, sell price, short price, correct cover price properly. All right. There is more to that. One more problem is like a buy can happen without crossover. A gap up also can happen. The price opens gap up. So if it is an intraday strategy, then gap up is unlikely. Okay, so we can ignore the gap up. But if it is a positional strategy, we may have to include gap up condition also. Intraday, intrabar strategy itself going to enter after 9:30 only, so we don't need to include any gap up or gap down conditions. So that solves one way. It is, you don't need to worry about those gap up, gap down scenarios. Now we'll do the same thing for the short and cover as well. I'm going to do it very quickly. So I'm going to take the I cover as temporary. You know the reason why, because it doesn't have a proper stop loss and target is not yet included with that. And then I'm going to XRM between short and I cover. Wherever cover is there, I'm going to make it like I cover. So now we have the values. Now I'm going to get the short price. So short price is over here. This is short price. Short price is done. Once the short price is done, next, what I have to implement? What I have to do that? Short price is done. Then what we have to calculate? Short target and short stop loss, right? So I'll put short target equal to my short price minus target. Whereas for short stop, nothing but from the entry price, I have to add the stops. So target and stop loss are calculated. Now my actual cover signal will become like this. How it becomes? Value when cover signal is happening. It can happen because of various reasons, but one among them is if the cover signal is happening because of negative signal, I mean reverse signal. So here is the reverse signal. If this reverse signal is happening, then upper channel will be my target, I mean my entry point. Or if the reverse signal is happening because of target is hit, means if the crossover of high comma short stop, if the stop loss is hit, price is breaking on the upper side, then short stop loss is my exit point. And if at all crossover of the target is getting hit on the lower side, that's L comma short target, then short target is the exit pricing. If one of them is not there, then exit will happen. Then I have to take it at the close of the candle. That means 3 o'clock candle closes, I have to exit my positions. And one more thing, I have to close the if loop properly. I haven't done that properly here yet. Close all the if loop properly. Here also, all the parentheses, whatever the parentheses I had open, I have to close all the open parentheses. Okay, I'm just closing all the parentheses as well. And now, since we are done with the cover price, there's nothing but the cover price, not the cover signal. Wait, so this is cover price. Where is the cover signal? Cover signal is nothing but I cover or the stop loss hit or the target hit. Or the target hit. Okay. Now, as usual, we have to do one more XRM. This time we are doing an XRM between the actual signals. I equal to XRM of short comma cover and cover equal to XRM of cover comma I short. Obviously, this has to happen after the signal is done properly. Once excessive signals are removed, then only we always have to implement the cover price. Otherwise, still backtesting may go wrong. If in case if you don't want your backtesting to go wrong, you want to get proper signals, always after doing an XRM, decide your exit price. Here also, even in entry price also, if entry requires an XRM, do the XRM and then implement the short price. Some people, what they will do, they put the short price and then they do the XM. That's not a very good scenario at all. Sometimes it may lead to mistakes. Sometimes it may lead to misleading backtesting results. So now the code contains what? Stop loss and target is included. But remember, it is not plotted. So I have to plot the target and stop loss also. So I'm going to plot the target and stop loss. So I'm going to say, I'm going to have one more control. I'm going to say like display target and display lines is a control basically. If the control is enabled, then only I want to show the values. So I'm going to use a control called param toggle. I want to give a thing called display lines, display target and stop loss. I want to say like enable or disable. By default, the value is 1. That means enable. It can, the param toggle always can contain only 2 values, 0 or 1, or true or false. So by default, I'm just assigning 1. That means by default, the value is enabled. Or I can say like enabled. By default, the value is enabled. I can switch to disabled. And then I'm going to say here, if display lines, that means if display lines is true, if the display line is enabled, then plot the target and stop loss. Plot the target lines and the stop loss lines, stop lines. Now I want to say one more thing is required over here. I need to do a flip between a buy and sell for a reason, because I need to know whether the buy is continuing or sell is continuing. So I'm going to say buy is continue. Buy continue equal to flip of buy comma sell. It's opposite of XREM. We already talked about this. And likewise, short continue equals flip of short comma cover. So what it does, the buy continue will remain 1 as long as the sell signal is going to occur. So that if the display lines is true, then I want to say like the display lines are true, then I need to plot what? I need to plot the buy target and buy stop loss. Buy target, I need to plot it, right? So I'm going to give some, say like buy target. I want to say like display line should be enabled, and at the same time, buy continue is also there. Then I'm going to plot buy target. I'm say color, maybe color green for the targets, and style line. Or maybe I can do like this. Instead of doing like this, I can say even the buy target itself we can modify. I can say my buy target is nothing but if buy continue is there. If buy continue is there, then I will use my buy target. What are the buy target I had calculated? Else I will make it like null. Means the target will have value only if the trade is continuing. As long as the buy trade is continuing, my buy target will be there. Likewise, my buy stop loss also will be there. So this will easy my code. Buy stop loss. Stop loss. Buy stop. So what I'm doing over here, when the signal is continuing, I'm having target values. If I don't have signal, it goes to null. All right. That's what it means. Likewise, the target and stop loss values will hold value as long as signal is continuing. Once the signal ends, value simply goes to null. And the same thing I'm going to do it for sell target and sell stop loss also. I mean, short target and short stop loss. Short target and short stop. So here I'm going to check whether short signal is continuing or not. Whether the short signal is continuing or not. So that I can get the actual short value and the actual short target, and short stop loss is what we're going to have it over here. All right. So then finally, I'm going to plot all the targets wherever it is required. I'm going to plot the buy target. I don't need these things. I just simply check display lines, and maybe style. We can take some different style. You can say like style dots, maybe, comma, or make it a little bit thicker. Style thicker. So likewise, I'm going to get all the 4 values. So what are those 4 values? Buy target, buy stop, so buy stop, which is nothing but the color red one over here, red. And finally, I'm going to have the short target and short stop loss. Okay, so short target and short stop loss. Short stop. Short target and short stop. Okay, so I guess almost we're done with the code here. We have a couple of error to fix. We try to figure it out. Semicolon is missing here, and then I'll try to click. What else now it is missing? Cover is used. Oh, it's supposed to be eye cover. The eye short need to be removed. It's supposed to be short. And finally, we have only one error. Buy stop used without having initialized. Maybe it's not a buy stop, or buy stops maybe. Yeah, I don't think I'll make it like buy stop. It's not stops, but it's stop. I'll make it like buy stop. Here buy stop, and finally here it is going to be a buy stop. Save the code, and maybe one more place where I have to remove the buy stop over here. It's supposed to be a buy stop. Save the code, check for errors, no errors, that means well and good. And then save the code, apply the code now. So I'll go back and check the code here. Now we can see I'm getting what? I'm getting a stop loss levels and target levels also. But then when the target is hitting, it is not showing me the arrows at the right point. When the stop loss is hitting, it's showing me. But when the short target, when it is hitting, it is not showing me. That means logically there is a flaw with the way I had coded the short targets. So short target, what I had done is something I had done wrongly. Short target equal to short price minus target. Maybe here I would have done a wrong way. It's supposed to be a short here. So it's supposed to be high comma short stop. That's small issue with the cover coding. And the low comma, I mean that means what? Short target, comma low. Short target, comma low. That means one more place I have to fix the target and stop loss. Here also it is low comma buy stop, comma buy stop. Okay, whereas here it is going to be short target comma low. Yeah, I think now the code is perfect. I'm sure all the stop loss and target, you can see that this target is hitting. Here the stop loss is hitting properly. Touch of the level, the stop loss will generate, not on closing basis. Here also a target is hitting It's not a target hit, but it's exiting because of why it's exiting. 10:15 doesn't exit. Maybe a reversal signal. Yeah, reversal signal is happening over here. And then what? No, exit. Is it because of target? Yeah, it is because of targets. Three o'clock exit. Here it is because of stop loss. All right. So either way, stop loss or target, because of that, the strategy is exiting properly. No, long signal target is not exiting properly. I think long target, you can see that every time there's a long, it is exiting immediately. So I need to figure out why it is happening. So long target, there is an issue. I have to go back and check the logic. So whenever you're checking, you have to check each and every logic, whether whatever you had implemented rightly or not. You should not be living in assumptions. Okay, you have to go back and validate those things. So where we are missing here, target, right? So buy target is nothing but buy price and target, which is correct. Cross of high comma buy target, that is also correct. But the stop loss is supposed to be buy stop comma low on the lower breakdown. That's a small silly mistake. I'm sure that could have fixed all the long things also. Yeah, that is totally, it's better. That's what I'm just thinking over here. Now it is totally fine. Here it is totally, look at the logic is running fine. So buy side issue also fixed, sell side issue also got a fixture totally. All right, so I guess this is one important thing. So I'll save this as a strategy. Now to this strategy, what I'm going to do here is I'm going to do a exploration based automation is what I'm going to implement. And how to do that? It's going to be the easiest one. So let me tell you how to do that. So I'm going to have a module over here, which I'm going to run basically from AlgoMojo. So I'll go to a test account an.algomojo. It could be any module. It doesn't matter. Any broker, doesn't matter. Procedure is going to be the same thing only. So from here, I'll go to AM library. Now from the AM library, I go to Amibroker modules. And from the Amibroker module, I'm going to get a probably a intraday equity exploration module. Okay. So what I'm going to do here is I'm going to go and download for a particular broker. Let us say Angel is what I'm going to download. I'm going to open the code. I'm going to add the code to my complete current block. Okay, this block. I'm going to add it. Now, after adding it, there is only a few things that one need to do over here. Let us say I am having a strategy. Now, this particular strategy, if I add it, I'll tell you what will happen. I'll add it and then I'll send it to exploration. So from the exploration, this goes to the exploration, right? This opens the exploration. This opens the exploration control over here. Simple downchain channel intraday trading system with target and stop loss. So now here, if I try to explore, let's say I want to explore with a bunch of symbols, maybe I'll have a watch list. I'll go to list 0, or maybe I'll do one thing. I'll try to come to actual real-time data. This is the actual real-time data connected with the global data feeds here. I do everything right from the scratch. I go to the strategy. Here is the strategy. I had added the exploration module, and from here I'll send it to analysis. That means in my Amibroker, it opens analysis and then it sets up those values. I'm going to run the strategy on a 5-minute time frame. So I select 5 minutes and I'll say long and short. That is more than enough. And press OK. And then select one recent day and select the watch list. Maybe the watch list might contain some bunch of values over here. Let us say maybe I'll try to select some of the watch list. I'll create a watch list 1. So watch list 1, I'm going to put some 4 symbols. Okay, so watch list 1. How I can add those symbols? I'll go to information. Sorry, I go to symbols, watch list, select those symbols. So watch list 1, I'll right click and add. Maybe I'll try to add something like Bank Nifty. I'll add it. Right click and then add the symbol. And then let's go and add Nifty here. Nifty. So I had added currently Nifty and Bank Nifty is what I had added over here. Only 2 symbols. I can add as many symbols I want. Even if you want to add hundreds of symbols, also can add. Now, once you're done with the scanning settings, you're done with the filter, go to the filter, small green color pipe bar, and select the watch list, list 1. So list 1 contains only 2 symbols, Nifty and Bank Nifty. So if I explore, I'll be getting bunch of values over here, right? Bunch of values. The next important thing that I need to do here is I need to set 2 things right. One is I have to set the trading symbol first properly, and also the quantity properly. These are the 2 immediate things to fix it out. If I fix everything, then automation will go as smooth as expected, and it's going to be a very simple task from there on. So at the coding side, I'm going to go and fix the trading symbol over here. The trading symbol is my actual trading symbol of angel broking. So it depends upon broker to broker, it changes. So all I have to do here is first I need to go back and go to the trading terminal, Algomojo terminal. I have to go and check the future symbol. So what I'm going to do here, I'm going to go and say that Nifty FUT. So this will be getting me the Nifty future symbols over here. Now once the Nifty future, this is a format. This is a format I'm going to set over here, right? So this is the sample format. Oops, yeah, Nifty future. So Nifty 28 July 22 FUT. That means if the symbol is going to be Nifty, I have to add 28 July 22 future along with it. This is the expiry date, right? So let's say I'm going to set up a couple of things over here under the controls. I go to the controls. I'll go to the TSIM. So in the Algomojo exploration module, you can see that the trading symbol, I'm deriving it. Name of the symbol minus EQ. This is mostly designed for equity markets. So right now I'm going to change this to our current market situation. What I'm going to do here is I'm going to use a thing called string replace. Name of the symbol represents Nifty-I dot NFO. In that, I'm going to remove the dot NFO over here. Dot NFO. I'm going to remove it. I mean -I dot NFO. -I dot NFO. I'm just going to simply remove this. If I remove the -I dot NFO, now what will happen? I'll tell you. My symbol will become what? My symbol will become, means if I go to my Amibroker, give me a second. I'll end this. Yeah. So now if I go to the exploration, if I go to explore, you can see that it is Nifty-I dot NFO. This will become only Nifty. It's supposed to get Nifty. So if there are errors, that means I haven't properly closed the things over here. Let's see which one did I miss. Missing arguments. Yeah, old string, my new string is going to be, I'm going to empty those string. Empty, wherever the -I dot NFO is there, I'm going to replace it with the, simply I'm going to remove that. That's what I'm going to do here. I'm going to simply cut off the values. So now I go and do an exploration. Now you can see that I'm getting only Nifty, Bank Nifty, all those values. Now along with that, I'm going to add this value over here. So I'm going to append those values. I'm going to call this value as, I'm going to add a control over here, basically expiry equals. Okay, this is my controls. I'm going to use a param string over here. Expiry date according to the broker on how to input the expiry date. So here is the expiry date. Yes, I'm adding the future FUT value also along with that. So this comes to 28 July 22 is what automatically it takes over here. Now this expiry is what I'm gonna add it to my trading symbol. Along with that, I'll add to my expiry so that it becomes Nifty 28 July 22 FUT. Let's see that whether it's happening or not. Let's go and check it out. I'll simply do an exploration. Now, if you see the symbol, there are two symbols you can see. This one is the Amibroker symbol, Nifty-I, and this is my angel broking. That is a broker symbol. So it's a very simple thing only. Even if you don't know, also if you know a simple string-based information, it's very easy to do. Even if you don't know, also the algomojo people will be helping you out in configuring. So this trading symbol is now fixed, right? So it doesn't matter whether you are playing for equity or you're playing in F&O. You need to know the trading symbol. Now comes the trading quantity. So when it comes to trading quantity, you need to know your entry quantity. You need to know your exit quantity also. So that is what we're going to fix over here. Let's see how to fix that. Okay. So here the position is showed for the equity markets. From the position only, we're going to derive the quantity. Obviously, this is for cash market. So for cash market, some people, they say like, I want to deploy for 10,000 rupees worth of intraday position I want to purchase. So they can define the position over here. This makes sense for the traders who are dealing with the equity markets. But when it comes to our markets, F&O, we need to know in lot size. So what I'm going to do here, I'm going to set the lot size over here. My actual quantity, so that is a quantity. So our actual quantity has been derived over here. Well, where exactly it is? Quantity. Some of the quantity has been done very, very deeper down below that. Yeah, here it is. So I mean entry quantity, like I'm gonna say like I wanna trade maybe one lot. So I'm gonna say like around lot size. Star number of lots. I mean, how many number of lots that you want to play? Or you can say like the round lot size. Under the round lot size, you can say always how many quantities that you want to trade. And whatever is the entry quantity, exit quantity is also more or less the same thing only. And exit short quantity also more or less the same thing only. That's the most easiest thing here. So round lot size, you know, where we had defined. We already defined in the symbol information tab we had defined. So for Nifty, it will try to take 25 shares. Oh, sorry, Nifty will try to take 50 shares. For Bank Nifty, it will try to take 25 shares. If in case if you want to control the quantity, you can always go and set the round lot size. Let's say you want to trade 4 lots of Bank Nifty. You can simply put round lot size as 100. You can go to the symbol information, go to the round lot size section and change the value to 100. So always it punches 100 quantity. Now, once this is done, now I'm sure the quantity is also fixed over here. Quantity is still not fixed. Why the quantity is not fixed yet? Because we are looking for a trading quantity. So where we are getting the trading quantity. So trading quantity is from here. Okay. It's not fixed because this is a different database that I'm working with. I'll go and set the Nifty quantity. I'll go to symbol information tab. I'll set the Nifty lot size as 50. And for Bank Nifty, I'll set the lot size as like, whatever the trade I want to do. Maybe for Bank Nifty, what I'm going to do? I'm going to say like I want to place 100 shares. Means 4 lots I want to trade. Nifty, I want to trade only 1 lot. Nifty, I want to trade 1 lot. So I'll go to the information. I'm going to set 50. Whereas for Bank Nifty, I want to trade how many lots? I want to trade probably 100 shares. That is 4 lots I want to trade. So I'm setting from here. Now, if you could see, if you explore it, you can see accordingly the quantity is happening over here. Only if short is happening, 50 quantity is taken. Again, short is taken in Bank Nifty. So 100 quantity is taken over here. Whereas Bank Nifty, buy signal is also happening. At the same time, short exit is also happening. So I have to do what? I have to buy 200 quantities over here. Means already I'm having a short signal. Now I'm closing the shorts. I'm opening a long. So I have to reverse my position from short to long. If I want to reverse from short to long, I have to punch twice the amount of quantity so that my position will get from 100 to minus 100. Minus 100 means it goes to net short. That way, the price would have been done. Now, finally, demonstration. I'm going to show you. I'm going to open a window log. All right. Oops, not the data window. Window log. And if I want to run it in real time, what I have to do here is I have to go to the settings. There's a small inverted triangle is there. I click on that inverted triangle. I enable auto repeat. And then I click on the inverted triangle again. I select the AR interval. Minimum, I want to set like 3 sec. And I want to press Shift Enter. Once I click on Shift Enter, I'm also going to verify again. I click on the settings, ensure that auto repeat is enabled. AR interval is also set to 3 seconds. If these two values are there, then you're good to go with the exploration. I'm going to simply click on exploration. You see that the value is, you can see that the screen is flickering every 3 seconds once. Now, what I need to do here is I have to go and set the values right. I'm going to do what? I'm going to enter the API key, API secret key. Exchange is NFO. NFO is not here, so I have to go and set the values NFO. Exchange values NFO. Since the code is designed for equity markets, I haven't done for NFO yet. So I'm just transforming the code into NFO. Let me add NFO over here. NFO. Here's exchange. Here's exchange. Let me make it like NFO. Okay, no errors. Cool. So I'll go to the settings. NFO is here, intraday. Algo mode enable. And ultimately, I need to get the API key and API secret key right. And that's the maximum thing I have to do it for automated trading. First of all, I'll go and open the My API section. Get the API key. All right. Get the API key. And get the API secret key as well. And I'll press OK. So algo is also enabled. So once algo is enabled, now I'm going to do what? I'm going to do a simulation. I'm going to do a simulation of 27th of March. May is what I'm going to do. May 27th. I'm going to simulate. I'm going to click on play. So if any signals are coming in, it should convert into orders. Say the day started. Almost 9:15 is the market is about to start. So 9:15, the market started. Obviously, you can see that there are no signals. So a fresh day has been started. No signals as of now. Time is running on. If any signal coming in, instantly it should convert into a order, right? Let's see, is there anything is happening or not? So far, no signals yet. So this is mostly useful if even if in case if you are trading with like 10 symbols or 20 symbols that you want to do it, you want to play in equity markets or you want to do it in F&O markets. Maybe opening multiple charts is not a feasible one. Rather, what is so feasible is like doing exploration module if in case we are dealing with multiple symbols, like 10 symbols, 20 symbols, like that. All right, so far no signals. We've been waiting for the signals to arrive. I hope the signals will arrive a bit faster. It's been keep on scanning, no signals yet, so no orders are not getting fired. The moment orders are fired, it should be immediately reflecting in the AlgoMojo trading terminal. Now, for the people who are very new to AlgoMojo is an algo execution platform, and it's quite free. It's lifetime free. You can see that what happened
Order
over here.
placed.
Let me pass it over here. You can see that the message, what I'm getting here is like the order has been placed for
Order
Nifty
placed.
and also Bank Nifty. So let me pass here. I already passed it. I'll go back to the tool to check that the order has been placed or not. I'll go to the order book. I can see that the orders, both the sell order has been placed already for the so and so quantity, and I can also verify it from the order log section also. Under the order log section, what time it happened, what time the order has been sent, everything I'll be able to track it from here. And of course, this code also contains the stop loss and targets also. If you remember, we also have a stop loss, targets, time-based entry, time-based exit, square of time, everything is over there. And now any new signals which is coming in, instantly, it will be placing those orders. Quantity, you can verify it from here.
Order
From the
placed.
trace, you can see whether the order has been sent properly or not. Not only from the trace, but also from the Algo Mojo trace, you can verify that yes, the orders are going on. So whatever the orders are here, it's been sending those orders promptly. All those information that you'll be able to see it from here. All right, so you can see
Order
that every time the
placed.
order is getting placed, you also get a sound alert also. All right, great. So I hope that clears today's information. Let me know if you have any questions. I can answer your questions. Otherwise, more or less, we have been done for the day. I thought of doing a virtual server, implementing a virtual server, but that could be a little bit of time consuming. Maybe we'll try to take it in the next week session. So I'll recap what are the things that we had done. We had implemented a simple dawn chain channel. We'll try to backtest that channel. Simple strategy. Followed by that, we try to convert the simple dawn chain channel. We try to find an optimal profitable point by fine-tuning it using the optimization function. And then followed by that, we also implemented an alert section. An alert is simple alert. It's simple sound-based alert is what we had added. Followed by the simple sound-based alert, we also implemented stop loss, target controls, and then we also included the exploration-based automation for multiple symbols. For example, here I had used only Nifty and Bank Nifty only. I also showed you the procedure for simulating during live markets as well. So Prakash is asking how to place options instead of futures. Yes, that is a very interesting question. As I said, it's been included in the, I think it is included in the next week session. So week 4 is what we're going to talk about, that designing. So under part 4, next week, we're going to talk about designing an option execution strategy where symbol will be executed in futures. Signal will be generated in futures. The execution will be happening in options. That is, and more things we'll be planning to cover in the next week session. All right. And then Lakshmikant is asking about what is the order delay. So generally the delay will be there in terms of 250 to 500 milliseconds is what max to max. The delay could be anywhere between 0 to 1 second. That's the maximum delay that we can generally anticipate when we are trading over the internet. All right. Mostly in milliseconds. If internet is a bit faster, mostly in 250 to 500 milliseconds, most likely. Or if it is going to be your servers are going to be hosted in Mumbai and very kept at a proximity to the exchange, maybe 50 milliseconds or maybe 100 milliseconds is what generally the order time delay will be. And depends upon the broker to broker, it varies because different brokers use different infra, different brokers host their host at different locations. Some people might be placing it very closer to the exchange. Some broker, they place it slightly far away from the exchange. So there are a lot of parameters are there. But despite everything, traditionally, in the modern API world, the delay, I don't think it will not exceed more than 1 second. So Raja Vikram is saying, I think we can add trailing stop loss also. Yes, exactly. Trailing stop loss, we will be discussing in our upcoming Quanzilla section. Our Quanzilla programs, kind of a 75 hours of mentoring session is starting from next month onwards. So you can check out the agenda in the Febinars portal itself, where we've been talking about implementing trailing stop loss and more other advanced stuff we will be covering in the Quanzilla program. So Prakash is asking, is it possible to code for MP and OFA based strategy? See, not everything about a market profile and OFA can be automated. Already there are tools which are there in MP. MP is not for automation. Some parts of market profile can be automated, but not the complete concepts of market profile. It cannot be automated. The same thing goes with order flow analysis also. So which brokers are recommended to avoid latency? Almost most of the brokers, as I said, they cover mostly under 1 second, less than 1 second. Most of the nest-based brokers we had seen, they are having a bit lower latency, anywhere between 200 to 250 milliseconds. And most of the other brokers will be falling under 200 to 500 milliseconds. That's what most of the brokers they have. That's a latency. So it can't exceed beyond that. All right. So almost every broker are reachable. Every broker, they host their servers in Mumbai only. Most of them are with NetMagic. Some of them are with Amazon AWS. So it doesn't matter which of the brokers they are. So most likely they are they place their servers closely proximity to the exchange only. Now on top of that, where your strategy is running, if in case you are running a strategy, if you are hiring a server in Mumbai, that's going to be an optimal one for sending orders. Maybe if in case you are placing your servers maybe in somewhere outside India, maybe you might experience a very, very minute delay. You can't even notice it with your naked eye. Probably those delay will be in again in milliseconds. Another 100 milliseconds or 200 milliseconds would have been added to your existing delay. So that is what. So ideally, irrespective of that, it will still punch orders less than 1 second. All right, and that is nominal. Even if you're going to place orders from your trading terminal also, it's the same thing. It's going to happen because these days most of the web-based terminals like Kite or Upstock's web terminal, everything, even your mobile application also is using the same APIs only. So if your mobile, whatever the mobile terminal is having the delay is the same delay you will experience in your automated trading application also, as simple as that. Most of the mobile terminals uses broker API. It's the same broker API is used for automated trading also. So obviously you don't find much of a difference between both the two. All right. Okay, cool. So let me pause here and maybe next week we'll talk more interesting thing. One among them is like deploying servers, and second thing is futures to options automation, which is the most easiest one. See you in the next week. Thank you.